Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HAIER SMARTHOME interim report. HAIER Smart Home Co., Limited, offers a diverse range of businesses and services across various sectors. Some of the key areas include smart home appliances, refrigerators/freezers, washing machines, dryers, air conditioners, laundry equipment, water appliances, kitchen and small appliances, logistics services, distribution of household appliance business, manufacturing and sale of plastic parts, precise plastics, encodings, assembly and sales of plastics and electronics products, gold-plated products, IoT technology and application services, urban distribution and transportation services, import and export of goods, technology, and food business, professional cleaning and waste treatment, energy, saving technology, house leasing and maintenance, gift procurement, venture capital investment and consultation, smart bathroom solutions, software development and sales. These businesses and services demonstrate the company's commitment to innovation and diversification in the smart home industry. The decline of HAIER SMARTHOME's stock price over the past year can be attributed to several key factors. One significant event was the manufacturing shift by GE Appliances, a subsidiary of HAIER SMARTHOME, which announced plans to transfer washing machine production from China to the U.S. This move led to an 18.18% year-to-date drop and a 13.79% fall in the stock over the preceding 12 months. Despite reporting record earnings for 2024, with a 13% jump in net profit and a 4% rise in revenue, HAIER SMARTHOME's stock price fell by 3.2%. This suggests that investors were not convinced by the company's financial performance, or perhaps were concerned about future prospects. The overall market performance also played a role in the decline of HAIER SMARTHOME's stock price, with its H stock falling 27.7% from its all-time high reached on October 7, 2024. Additionally, the company experienced a short-term drop in early 2025, with its share price down 12% over 3 months, leading up to January 13, 2025. These factors combined have contributed to HAIER SMARTHOME's stock price decline over the past year, highlighting the complexities and challenges faced by the company in the current market. The primary drivers of revenue growth or decline can be summarized into several key areas. Revenue growth is primarily driven by the expansion of household appliances, particularly air conditioners and water appliances, which have seen significant increases in sales due to enhanced product competitiveness and technological innovation. Additionally, the domestic market has experienced growth through the launch of standout products, implementation of digital transformation initiatives, and strategic collaborations with other brands. Overseas markets have also contributed to revenue growth through advanced premium brand building strategies, localized product development, and improved retail models. On the other hand, revenue decline is primarily driven by weak demand in certain segments, such as integrated stoves due to a sluggish property market and electric storage heaters. The mid-range segment has also been under pressure due to polarized consumer demand between premium and value-for-money segments. Furthermore, macroeconomic slowdown and price wars caused by intensified industry competition have contributed to revenue decline. Net income and profit margins. A mixed picture. The financial performance of the company reveals mixed trends in net income and profit margins. In the first half of 2025, net income increased by 15.6% to RMB 12.033 billion, indicating a positive growth. However, this trend was short-lived as net income decreased by 59% in another period, with no specific reason mentioned. On the other hand, profit margins showed a more consistent picture. The gross profit margin rose by 0.1 percentage points to 26.4%, while the selling and distribution expense ratio declined by 0.1 percentage points to 10.1%. However, the administrative expense ratio increased by 0.1 percentage points to 8.1%. The increase in net income in the first half of 2025 can be attributed to various factors, including improved operational efficiency and effective cost management. The decrease in net income in another period may be due to unforeseen circumstances or external factors that affected the company's performance. Overall, the mixed trends in net income and profit margins highlight the need for the company to focus on maintaining a stable financial performance and addressing any underlying issues that may have contributed to the decline in net income. The company is generating positive operating cash flow, indicating a strong financial position. The data shows that the net cash flow from operating activities has increased by RM 715 billion in 2025 compared to the same period in 2024, reaching RM 11.139 billion. This significant increase suggests that the company's operations are generating sufficient cash to cover its expenses and investments, resulting in a positive operating cash flow of RMB 13,135 in 2025. The company's debt level and interest expenses have undergone significant changes. While the total debt level has decreased by $37,480 million, minus 18%, over the past year, interest-bearing borrowings have increased by $33,793 million. This increase in interest-bearing borrowings is likely to result in higher interest expenses. However, net interest expenses have decreased by 67%, suggesting that the company's efforts to manage its debt may be paying off. Nevertheless, total finance costs have increased from RMB 1,244 million to RMB 1,416 million, indicating a mixed trend in the company's financial health. The company's financial performance varied across different segments and regions. Notably, kitchen appliances and household food storage on page 17 achieved significant revenue and profit growth, with revenues of $31,938 million and $42,853 million respectively. The domestic market also performed well, as did overseas markets, which experienced year-on-year gross margin growth. In contrast, Air Solutions on page 17 struggled to turn a profit, generating only $318 in profit despite high revenue of $67,687 million. Additionally, Air Solutions and Water Solutions on page 18 underperformed overall. Management is optimistic about the company's outlook due to various factors. They attribute a significant increase in revenue to government grants and other gains. The company has achieved over 95% market share in a specific price segment with its new product launch. It is investing in e-commerce platforms, expanding into overseas markets, and transitioning its product mix from twin-tub to front-load washing machines. The company's growth was driven by product upgrades, localization strategies, and technological innovation. Its adjusted operating profit increased by 12.9% due to profit growth in global business segments. Management plans to strengthen the company's financial position through placings and utilizing net proceeds for production capacity expansion, ESG-related areas, digitalization, and overseas channel expansion. Overall, management is confident about the company's future prospects, driven by its successful product launches, strategic investments, and focus on innovation and expansion. The company's financial summary reveals that it has engaged in two key shareholder return initiatives. Firstly, the company has a history of paying dividends to its shareholders, with a final dividend payment of RMB 8,997 million recorded on page 27. Secondly, the company has also undertaken share buybacks, as noted on page 42. That concludes the financial summary for HAIER SMARTHOME. Feel free to comment below, and I will be happy to answer them when possible.